Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors.
Greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. In this episode, I want to get into the idea that negative headlines may be really threatening, certainly confidence and potentially economic growth and the markets. And through all this, though, I'll sort of paint a picture that may allow us to take a look at U.S. resilience and how that may prevail, and we may see a shift in a more positive direction. So let's take a step back, though, and talk about animal spirits. Animal spirits is a concept that was first introduced by John Maynard Keynes in a book, The General Theory of Employment, Interest, and Money, in 1936, describing how emotions and psychology can influence economic decisions beyond being purely rational. And so this is something that's been around and aware. And then essentially there's a book in 2009 by Robert Shiller and George Akerlof that sort of revived a look at that concept, right? And in their case, they did make mention of the idea that things like negative or pessimistic news coverage can dampen consumer spending and investment and business investment that can, again, lead to sort of a softening of the economy. And so anyway, to take a step back, we think about what's been going on. Basically what we see is, really heavily negative and sometimes sensationalistic headlines. And so it got me thinking, I wanted to do a study. So I used a process where I could look at hundreds of articles, basically gauge the tone of their title, their headline, if you will, and then actually look at the article and see if it was negative, neutral, or positive. And the punchline is that and I focused in on tariffs since April 1st. And so basically since then, 75% of the articles on tariffs have been negative. And yet when we look through to the underlying content of the articles, basically 2/3 of those negative articles are neutral to potentially positive, with many of the others sort of just ignoring what might be a positive, either positive interpretation or an other thing to look at that might be a little bit more positive. And so in an interesting way, when you do the arithmetic on these percentages, basically the articles themselves have been reasonably balanced, but the headlines have been super negative. And so it does, again, sort of draw the attention of individuals and business leaders. It can sort of make people cautious and worried. And so the concern is that leads to a pause in spending or business investment. And so the whole thing can kind of lead to a slowdown. Now, to give you one specific example, because it really struck me, there was an article that I believe was posted by the Wall Street Journal, and I'll just give you the title. It said, "Dow headed for worst April since 1932 as investors send sell signal." Now, this was early in the month. It was sort of right at the trough, if you will, of negative news and issues around tariffs. And for that short time, month to date, and I actually looked at the S&P as a more representative, a little bit more diversified index, but the idea is, well, what's going on with stocks? Basically, it fell 11.2% to start the month. And this was the second worst such move since 1932. So in some ways, that's a fair point. But from there, the market recovered. It ended up recovering from that low 11.8%. And that ended up, since 1932, being the fifth best recovery during the month in April since then. And overall, the return for the S&P 500 in this case was down 0.7% for the month of April. So the broad equity market had sort of a yawn kind of average, not average, but kind of softly negative experience, not softly negative month. And my point in bringing this all up is just to point out the contrast that we've got headlines where especially people who aren't tracking things so closely are going to look and say, oh my gosh, the equity market is as bad as it was in 1932. And in fact, it was it was volatile for sure, but a relatively overall typical or month that's, within a normal outcome. And so that's just a really simple example of the kinds of things we were looking at. In any event, so what does that mean when we look at data? Well, what we're seeing, as we've talked about before, is that soft data, which can impact animal spirits, has really turned negative. And so Conference Board produces consumer confidence. We've talked about it before. It's at a 13-year low, down at a level of 86 in April. And then another, that's the consumer. Another would be business confidence, in this case, the NFIB Small Business Confidence Index, which actually really jumped up in the wake of the election. So it was super positive. And it's fallen back down. So it's being eroded for sure based on these worries. But interestingly, just to a level of 97.4, which is just very close, but just slightly below the 51-year average of 98. And so think of it as there's been a softening or less optimism in the business segment, but not quite super negative yet, at least as relates to small businesses based on that soft data. In any event, what's notable, and of course everyone's watching very closely, is the quote-unquote hard data. That is actual results. And so the two that I'll point out in this episode that are pretty important, one is when we look at the early estimate, first estimate of first quarter GDP, essentially consumption, that's the consumer, grew at an annualized rate of 1.8% in the first quarter. And so, yeah, there was basically a jump in imports that caused the overall GDP print to be slightly negative. But when it comes to consumption, the consumer, which is an anchor to GDP, basically a pretty positive result. And then we're tracking closely earnings, and essentially, in this case, for the first quarter, and so far, as of the analysis I just looked at and had the team run, 83% of companies in the S&P 500 reporting, they've reported earnings growth for first quarter year over year of 13.6%. That's a very positive number. And so anyway, what does that mean? Well, what we also want to keep an eye out for is what I would call shifts that might turn the narrative positive. And so as we kind of prepared for this session and wrote the corresponding article, we're sort of saying, hey, we're expecting the Trump administration to announce some trade deals. And coincidentally, as I kind of sat down to record this, a headline this morning is that, and I think it's about a framework, but that Trump's going to announce a framework for negotiation with the UK to get to a trade deal. And that's, a big deal in terms of, an important sort of ally and trading partner, and a good sort of anchor to get things started. But just imagine an environment over the next number of months where we see a lot of trade deals struck, where the tariff pressure that's been imposed is relieved. And that could easily spin things a lot more positive. The other thing, of course, that's in focus is the idea of extending the 2017 tax cuts and implementing some more, and almost having more relief on the tax front. That would, again, typically be sort of a lift to the consumer, to businesses, and to the economy and markets. And so those are the kinds of possible shifts that we're watching for as we look forward. So again, what I find interesting is we're in a sea of negativity for sure. Lots of negative headlines. The headlines are biased relative to the articles themselves, which is not uncommon. It's all about getting clicks. But it begs the question, what does that mean for animal spirits? What does that mean for the economy and the markets? And our work and our job is to try to look through all that and look for what's actually happening, number one, in some ways kind of the truth. And number two, where do we think things are headed? And we just don't think things are going to be quite as negative as those pictures that have been painted, if you will. And so anyway, hey, that's what I wanted to get into in this episode. Thank you so much for listening this week, and we'll catch you on the next one.
Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.